Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, this is the COB, all the stuff you need to know about the day in business and markets. And I'm Danny Akuye here with...
Andrew Gagan. Yes, I'm here too, which is unusual. But look, it's an unusual day, isn't it? Because we've had the big race and the big rates decision too.
Absolutely.
Maybe, well, I don't know about the race. I don't know whether that went according to plan, but certainly the rates pretty much did, given markets had priced in a better than even chance that we were going to lift, and that's what they did.
Absolutely. And just having a look at the market responses, it's really interesting because to a large degree it looks like that 25 basis point hike that we had to 4.35 very much discounted in the market. So the SIBO 200 at the moment looks like it's closing down about 14 points to 6,983 or 0.2%. And there we have, sorry if I said SIBO, I meant ASX, and this is the SIBO 200 also down by 0.2%. And we were just chatting off camera, a lot of the reaction has actually been in the Aussie dollar, which is almost down 0.8%. So there we go, Andrew. Markets, what do you think they took away from the RBA?
Well, it looked like something of a dovish hike, didn't it? Because the language did change right at the end. You always look for the last paragraph in the RBA statement, where it was referring to not the possibility of rates hiking, but whether rates need to be hiked again, depending on the data. Markets, I think, interpreting that as maybe they are done. Finally,
maybe they are. But what would be unusual, and I was reminded of that just a moment ago, is the fact that typically once they pause and if they hike, they typically do too. So maybe they're going to break the trend. Anyway, let's check in with our three themes of the day, which of course is a less hawkish hike. Which
less hawkish, more dovish, but it's a hike either way.
Absolutely. So I think we have covered the RBA and the hikes all day, so you can catch up with all of those interviews. But I just wanted to highlight James Hardie is reporting second quarter results tomorrow, and both Jefferies and Citigroup actually think they're going to surprise to the upside.
Which is surprising.
It's surprising, it is indeed, because housing, well, new starts in the US are still quite...
Well, it's all about the US, isn't it, really?
Exactly.
That is the market for James Hardie.
Yeah, and I think some cost outs there as well. So that's one for you to keep an eye on tomorrow, because we were a little bit thin on the ground when it came to corporate news today. And China, it looks as though the great thaw, is the great thaw happening,
Well,
Andrew?
I don't know. We did see imports increased, exports decreased. So that's not great news, is it? Exports down about 6.5% from a year earlier in October. So clearly there's some pressure there. And of course, we're seeing what's going on with demand more generally, both domestically and also as far as overseas is concerned. That comes off those PMI figures. So we're still seeing that weakness there in manufacturing. Have we seen the bottom in China?
I don't know. It looks as though it's very, very patchy indeed, but at least we'll be selling our wine, apparently, and our beef, and maybe our lobsters as well.
Yeah, so, you make a good point, of course, because Anthony Albanese in China at the moment, by all accounts, a great meeting with Xi Jinping, and also from the Premier as well, who described Anthony Albanese as a good-looking boy, which, I don't know, I think the interpretation of Chinese they might have got it wrong, but that's essentially what he says.
Well, clearly they like him. There we go. So we'll take it. When I was referring to a thawing, I was obviously referring to the fact that we have had a thawing between China and also Australia. And also, it's interesting, Xi Jinping is actually going over to the United States too. So just interesting. Yeah, okay. Let's check in with some of the sectors and have a look at the banks, which were obviously... They were all positive yesterday, but profit taking coming in here today, particularly with Westpac, couple of downgrades there, but largely due to the fact that you have seen a strong share price performance. Commonwealth Bank holding up the most. Yeah,
checking out tech. Look, largely positive, as you can see there, reflected with some of the biggies there, WiseTech and Xero. Certainly up. Block, of course, went ballistic a few days back, but off the back of its results. And Tech One and Altium following up the lead there. And
healthcare, let's have a look at that. And we have actually had good buying coming in yet again, although ResMed a wee bit softer. Cochlear looks like in the larger medtech that they're moving up strongly today. And also on the second page, I think we'll find out that Healias was off to the races. We couldn't track down why, and also Pro Medicus up by almost 3%. Hard to buy that stock, it just never comes down.
all right, utilities, and let's take a look at that. A little bit of pressure there, but pretty much mixed for those utilities today. And in the REITs, of course, they have been under pressure. And well, that was mixed too, essentially. But I don't know whether we actually saw a reaction there, particularly off the back of that rate hike.
No, not much of a reaction. Now, let's look at some of the corporate news. And Origin Energy was up by about 1.6% after Institutional Shareholder Services recommended investors to vote in favour of the Brookfield-led consortium's US $10.5 billion bid for the electricity generator.
So Morgan's downgrading it to hold from AD, posting that the 7% decline in FY23 earnings, which was broadly in line with the broker's expectations. Net interest margin there falling by 2 basis points to 194 due to increased competition offset by the benefit of high interest rates.
Yeah, so that was basically Westpac. They've slightly downgraded the share price target to $21.58 from $21.61. And just an upgrade from Citi on Westpac in terms of their price target to $23.60 from $21.80. And let's just have a look too in terms of, we've talked about James Hardie, looks like they are going to have a solid beat tomorrow. They've also got expectation of some cost declines coming through. Interesting to note, Jefferies today have come out with a Goodman Group price target hike of 21% to $26.59. So they thought they were very solid results coming through there. And Karoon Energy, just worth noting that Citi have actually initiated coverage on that one with a $3 price target and a buy rating. And of course the stock went down, didn't it, by 2%. But
yeah, well, let's get to our stock of the day then. This one, Chrysos, ticker code C79, and look, it is mining services. It's sort of industry technology in the mining sector. Did return from a trading halt and then dropped into the red. So let's have a listen to what our guests on the call, Rudy Philip Van Dyke and Shaw and Partners Philip Pepe, had to say.
Can add it to your portfolio, don't put too much money in there. Personally, the type of investor I am, I have these companies simply on my radar and I give them a little bit more time to prove themselves, because there will be downturns, and the downturns will show you probably the information you need to know if you're intending to hold those companies for the longer run.
Last week's announcement really gives a tick of approval to the technology. So we think, or our analyst thinks, that that's just the first stepping stone. It should win more contracts over time to get to its profitability. And as we've seen, when companies move from loss making to profit making, it gets another leg up. So, you know, it sort of fell after the IPO. It's back above IPO price now. It's back at the issue price overnight. Again, we've been trading for a couple of hours. But for those who like technology that's in old school mining, gold mining, this is the way of the future. It's backed by the CSIRO, so we like what they're doing. We like the company. On behalf of my colleague who can't publish for a few days, I suspect we're still going to like it post the raise, and yeah, we like it. We call it a buy. I think it's a buy.
There we go. That's there's a buy from Philip there, and also getting the view on Rudy on Chrysos Corporation. All right, well, let's get to it. News of the day. Mark Gardner joining us now from MPC Markets. Mark, you're making the point that you haven't seen a Melbourne Cup for 25 years because a rates decision is much more exciting.
Well, as an interest rate trader who traded short-term interest rates, yeah, it was probably a little bit of a higher priority to be sitting in front of my computer trading as opposed to being in the Melbourne Cup. And I don't seem to have a hell of a lot of luck with the Melbourne Cup, but to put it in racing terms today, I suppose it was $1.50 favourite for the RBA to hike. So,
did you have more luck today though with the RBA hike in terms of?
Look, we probably not really. I mean, it was a relatively quiet market overall. We've been pretty relieved to see a bounce in those healthcare stocks over the last couple of days. And look, we were long some Aussie dollar leading in, but there was probably a little bit too much chatter prior to the number, where everyone was overwhelmingly bullish, and we don't really like to be in crowded positions like that. So, but yeah, it was a pretty pedestrian day. I'm used to very quiet markets. On Melbourne Cup Day, but you can catch up on a few things.
Well, it's pretty amazing. You mentioned the Aussie dollar. That fall has been precipitous since there. Like an initial bounce, and then it's been down ever since.
Yeah, look, I mean, you can't really expect a reaction, in favour when the odds are $1.50 overall. Like if it was that expected, and I think the RBA overall, they would have been, new governor. When we've seen this 100 times in companies that get new management. It's really easy to make the hard decisions when you've just taken over, because you can either blame it on previous management or you're a hero for making the change. So I think it was a no-brainer that they went today, because after the beating that the previous governor got in the press, I don't think they probably don't want to be doing a Christmas hike unless they absolutely have to. And if they left out today and had another higher monthly inflation number, well, then they were kind of cornered. So it made a lot of sense, to go today, and then look, if they really need to go in December, they need to go in December. But we've had some pretty strong numbers, strong inflation numbers. If people want interest rates to stop going up, they've got to stop spending. Basically, like
have you told your kids that?
No. I've got three or four birthdays in the next month, so leading into Christmas. So it's an expensive time of year for us.
Let's face it, that cohort, those households that don't have debt, they're still spending at the moment. It's going to be really felt among the renters and those with a mortgage, isn't it?
Yeah, absolutely. But look, the numbers are still pretty strong. The unemployment rate is sub 4%. I mean, we've got to be very careful in historical context to start whinging too soon, because everyone's still got a job, and people are going to get used to making sacrifices, which the last 10 years where there was just a flood of money.
It takes a lot, doesn't it, to wind back all that behaviour that people got flooded with a whole lot of cash, didn't they, in lockdowns, and everybody got into the habit of buying, and it takes humans
and then it was solved a lot faster, I think, than people thought it would be, and you can't really criticise the government for flushing stimulus into it in the face of a pandemic, because at the time they didn't know how it was going to pan out. So, but we do have to unwind it, and every economic cycles are supposed to have a period of at least contraction and a little bit of pain. So, it's just the way things work. We can't have endless growth and everyone be happy. So,
contrary to what certain politicians would love.
Yeah, well, and hence this continuous conflict between fiscal policy and monetary policy.
Yeah.
I mean, if the governments, even in the US and here particularly, had been more responsible with their fiscal discipline, we probably wouldn't need these rate hikes. And they're hitting a really targeted and specific part of the market. So I think a little bit more of a united front from fiscal and monetary policy areas would probably solve this problem a hell of a lot quicker than just the blunt sledgehammer of monetary policy.
So, I was just going to ask, in terms of the US, do you think now we've seen peak yields over there? I mean, on Friday, the jobs data was pretty soft. The bond market, there was a lot of unwinding of shorts last week, which may have distorted things. But nevertheless, we've seen the peak?
Look, I think for the actual headline FOMC benchmark rate, it's quite possible. With bond yields, I think it's a lot more to do with, they've got to issue basically $1 trillion a quarter in T-bills to maintain the debt. They've got to issue more debt to pay off the debt, that they've got. It's that irresponsible fiscal policies, and we're going into an election year in the US.
Did you hear Stanley Druckenmiller? Did you listen to his
No,
speech?
There was Paul Tudor-Jones had a very similar thing, and it's just, when the market's nearly already full, and essentially what's going to happen, if they keep issuing and issuing and issuing, investors are going to start asking for a higher rate, and I think that's just going to underpin it. And they're obviously unwinding QE as well, so it's not. I don't think we should necessarily be paying as much attention to what the Fed's going to do in terms of the benchmark rate, but possibly be watching that quantitative tightening, and really the government over there has got to get. It's got to get its act together. Like it cannot just, and with an election year coming up, it's highly unlikely it's going to be next year because there'll be promises made. But they can't keep rolling into lockdown, and government shutdowns, into debt ceilings, continuously. It's just not. They're just kicking the can down the road to a greater.
Well, that might be wishful thinking. The Republicans seem intent on brinkmanship. Mark, where do you see equity markets going at the moment? The perception really that Australia is about 6 months behind the US, certainly with its rates policy. Given we've seen the bounce recently in the equity market in the States, are we likely to be an underperformer on our equity market, do you think, now?
We've already underperformed quite significantly. I think rates higher for longer. I think equity markets probably sideways for longer. And I think in there you've probably got to include a little bit of a risk factor that regional banks were the weakest sector last night in the US, and there's sort of cracks starting to show in deposit levels. Obviously, and credit card debt's going up over there, and defaults are starting to go up. So, and they're not really, because no one's moving off their 30-year mortgages. So you've locked in all these people that have locked in these fantastic 1% and 2% rates. No one's moving because they can't afford to move because the rate is now 30-year highs in a mortgage rate. So essentially, these banks are not making that extra NIM. They're actually, and particularly if they're unhedged, they're actually going backwards. So I'd be worried about potentially another regional bank or a geopolitical situation causing a bit of a panic, but I don't really see any dramatic need. So, I mean, everyone rejoiced their softer number in the US, but there's always a very narrow window for, bad news is good news, because bad news becomes bad news very quickly. Yeah. It'll only take 1 or 2 months where they go, oh, actually, that's 3 down payrolls in a row. Maybe we're starting to get into a bit of trouble here, that markets might start to turn. So, it's just still, there's some really good short-term plays out there. We've had things like uranium. Obviously, lithium's been moving around, but there's been various bounces. There's been good corporate earnings from a few. So I think you can probably be, if you're a little bit active, I think you can probably chip away on some pretty high percentage plays. But I still think you need to be pretty cautious from a broad standpoint, probably into the early next year.
So Santa's rally might not be so exuberant this year.
Oh, look, it happens 71% of the time.
And 30% it doesn't.
Well, yeah.
And Mark is a betting man, as we know.
The words of Anchorman, 70% of the time. It happens every time. But look, it will obviously depend. These things are really hard to predict if cracks start to show, but I just think caution's definitely warranted. But there are still small, short-term opportunities out there. I just think you need to be agile.
Oh, fair enough. Well, Mark, thank you so much for joining us, Mark Gardner from MPC Markets. So let's have a look at the market leaders today and check out which stocks were moving and shaking. Now, Imugene, they had some news out today. They've got an update which is coming out tomorrow morning, I think, Andrew. Yep.
Either way, the market's liking it, so it is up around 27%. Healias also doing very well today, and some in the resource sector led by Lake Resources.
Exactly. Let's have a look at the laggards and see what is happening there. Chalice Mining off by 5%, as Sayona also similar.
Well, it's all in the lithium sector, isn't it? They're among the top losers today.
Yeah, lithium being sold off again. And let's have a look at the small caps. Imugene, there we go, out in front, up 27%, and Walkabout Resources up 10%. Let's have a look at the laggards in the small caps. Aurelia Metals off by 9, Bowen Coal off by 9. Oh, Bougainville Copper, gosh, you don't hear that one very often, do you? Off also by almost 9%. Okay. What's on overnight?
We're a bit light, but look, we do, out of the US, we do have a trade balance and also some consumer credit data. That'll be interesting just to see where that's travelling at the moment. And just in terms of earnings, it does continue stateside, eBay, Uber, Occidental, and Devon Energy.
Yeah, and tomorrow, my gosh, we've had such a build-up into the RBA meeting, but we've got Eurozone retail sales for September. We've got some AGMs, Orcam, Breville, Domain and Magellan. Magellan will be interesting. And Xero. Oh, I didn't realise Xero's reporting as well as James Hardie. Interesting. And ResMed going ex-dividend. So let's have a final check on the markets before, actually no, let's do registrations are now open for our next virtual investor event.
Well, that's small caps, isn't it? That's what we're talking about. Small caps, big ideas. It is back this year, and bigger and better. Also faster too. Now, if you weren't a subscriber in previous years, we do bring together 10 of Australia's leading small cap fund managers to present one high conviction idea. And this year, we're throwing in a fast and furious special edition of The Call featuring microcaps chosen by you. So, yes, register by...
register at ausbiz.co/smallcaps23. That's ausbiz.co/smallcaps23. So try again. Let's have a check-in on the market. SIBO 200, let's have a look. The ASX 200 is down almost 0.3%. That's about 20 points, 6,977. And the SIBO off by...
a fifth.
Yes, a fifth, absolutely. And look at that, the Aussie dollar off by 0.8%, 64.
All right,
36.
has been an exciting day. Hope you enjoyed it, or maybe you're just recoiling in the lounge at the moment. Either way, thanks for watching and listening to us. We'll do it all again tomorrow.
Have a good evening.